William is technical strategist at MIG Bank and joins us now for a technical analysis look at the markets. Right, should we start off on the euro-dollar? Tell me something about this pair that's interesting. I find it, despite the amount of airtime we give it, I find it quite a dull pair. In fact, it's only marginally ever away from where it is over its two-year average.
Well, about 2 months ago, I mean, that may have been the case when it was trading within that range, a range I called the Bermuda Triangle. It produced a lot of false signals and caught people out on both sides. But ever since then, we've had a fall from grace. The euro-dollar has moved marginally lower, made a key low at 130 recently, where we've had that bounce from oversold conditions.
And where's it going then?
Well, I think that we're now starting to see daily reversals to the downside, and we are more than likely to get a resumption lower back into 130, but my other target is around 126.70, which is around this year's major lows.
Guy, just a quick word on euro. I mean, will you be pleased to see the euro go down to those kind of levels? I mean, does it actually improve the prospects for Europe, makes us more competitive?
We saw another stunning set of German export numbers hidden amidst the sort of rubble of other data, and I'm just extremely excited about European export earnings going forward. Interested, the AXA Nobel problems came out because they had a lot of local currency production, so they didn't get the overlap. You see the Nestle results this morning, which were hammered last year by the Swiss franc, but now being able to lock onto the euro and get that sort of rate, if these numbers are right, is going to be extremely good for the European export industry.
Germany is atypical though, isn't it? It doesn't seem to lose significantly when the euro strengthens. If anything, it's found its niche in the market where it exports to China and to other economies goods that they will pay for regardless of the prices ticking up.
But we're seeing that in European pharmaceuticals, we're seeing that in the auto industry right across Europe, we're seeing a lot of Northern European production, we're seeing EADS, which has the largest order book in the history of the planet. Apparently once in the 19th century some shipbuilders had bigger orders, but those sort of numbers, with quite a Eurocentric production bias, if that currency forecast is right, we're going to see another round of upgrades for the industrials.
Meanwhile, back on the gloomy side, Greek CDSs have risen to over 5,000 BPS in 1 month. Onwards and upwards then, or what's the chart telling us?
The chart's telling us that the perception of default risk is definitely accelerated, and I mark the word perception because, of course, that's what's driving these proxies up. More recently, yes, having already accelerated up 5,000 basis points in just 1 month, which is extraordinary, it is now resuming higher. One of the key points I'll make aside from Greece is that, of course, a lot of this is adding to that contagion effect that we're all aware of, and Italy and Spain remain the sleeping giants of this kind of comparison of CDS risk, and definitely ones to watch in the next few weeks and months.
So the relative performance of Italy, Spain on the CDSs, you expect a big increase on the CDSs of those two then?
Yes, I mean they're already either at all-time highs or approaching all-time highs, and Greek CDS is actually about to pop and make a new all-time high, which is something we would look at from a technical perspective.
Ron, what about the US dollar index?
Well, this is an interesting story for the US dollar generally, and this has been a positive story for several weeks. Most people have been long-term bears on the US dollar, and every time I speak to clients, they're now turning bullish, mainly because the US dollar is now was at a 6-month high, I should say, up about 10%. But the big economic story is the big safe haven flow looking for a home, unable to find any in Swiss franc, Japanese yen, and various other proxies, strong currencies like the Singapore dollar, which are mean reverting from record highs. And so this is all benefiting the US dollar in a very big way. Also, the US dollar is at an opposite end of this whole kind of technical setup. It's coming from major lows, major oversold levels. So my view for the US dollar has long been a move of up to 30% in the next 6 to 12 months. We've already seen 10%.
Very briefly, Guy, you want to come in, yeah?
What would that mean for the yen? I mean, that is the key to unlocking the Japanese stock market. Is that the beginning, sort of post the earthquake noise, of some changing in the yen trajectory?
Yes, and the yen is something I watch very closely. The yen has held back the dollar index in a big way. I think it's about roughly 17% of the index, and it's if anything, it's one of the reasons why the US dollar index hasn't performed as well as it could have. I believe the yen is in a major structural change from a cycle perspective. and dollar yen, I think, in some time frame, maybe of the short term to medium term, will surprise and have a big acceleration to the upside. So US dollar strength over Japanese yen.
And short to medium is?
Short to medium, I mean, the key levels I'm looking at are 80, as I think the Bank of Japan will be watching very closely, and then various other levels into 82. I'm looking at the inflection points when the earthquake actually took place as big psychological areas. Yeah.
I think we'll leave it there.
Please.
Ron, we got it.
Sure.
Brilliant. That's very kind of you. Thank you very much, Steve, for joining us. Very nice.
Thank
Ron
you.
William, technical strategist at MIG Bank.